Hello once again, I'm BR Schultz. Thank you for joining me at BR Schultz SP500 stock market timing episode here on YouTube. The last call was for a peak around February 11th or 12th, plus or minus a half business day. Half business day led us right around the 6100 mark. So the model is still fighting for its call, still holding its own, so to speak. It gets like a 1% buffer on the back side, as you might expect. You got to have a green, right? So to stay on the green, it needs to stay within 1% of where the top was, the highest point in the SPX 500 USD within the window. So I think that would be up around 60 roughly. If you start breaking above that, then obviously the model has failed. But overall, I think the model's doing good, holding its own for a macro peak call. And those of you who have been on my WordPress blog, you can Google BR Schultz SP500. It's a WordPress site. Essentially, you can look up all the different details that I'm going to show you today, but I'm just going to add a little verbiage to it, a little walkthrough. As I'm probably going to get a lot of nasty grams, today's episode is not to say we're going to have specifically a 1987. It's to show you similarities between the 1987 5-minute algorithms and the 2025 5-minute algorithms for the current market in mid-February of 2025. I use a system of moving averages to help me with my placement of my trades and macro views of the markets. And those of you who have been on my blog know that 1929, 1987, I think 1962, the daily candlesticks on the SPX went up and tagged a certain gold moving average that I have. And we're right there on the SPX, the S&P 500 index, just like 1929, just like 1962, and just like 1987. So there's some similarities there. Again, you can go to my blog and you can spend your time going through that. Again, if I get tons of donations someday, I'll make my videos more robust. I'll include a lot more of these tidbits. But I gotta leave something out there, right, for you to desire and want. And obviously, you want the accuracy above all else. So, anyways, that's just a walkthrough of what you're gonna find on my blog. I've created what I call a Homer Simpson algorithm. I think it's pretty funny. I get a good chuckle out of that. I was chuckling last night with my wife about that one. It's my latest invention. Basically, it just picks out macro peaks and bottoms. It was calling for a macro peak here, roughly mid-February, plus or minus 2 business days, and then a macro low in the markets around March 21st, plus or minus 2 business days, when you want to do a super macro view, which I thought was pretty cool. And then I think the 5-minute too. You can go on my blog again. It's called the Red Line Model. It's also the couch potato Homer Simpson algorithm that I've created. But I want to get to the 1987 lottery ticket. So again, I know I'm going to get nasty grams saying that I'm even referencing 1987. The point is not to say we're going to have an exact 1987. The point is to show you similarities in the two models. And also some people might want to see what 1987 looked like in the model, right? And how did it fare? What did it look like? Were the different algorithms timing out with October 19th, October 20th, 1987, Black Monday. In some parts of the world, I guess it was October 20th, according to Wikipedia Online. So I just think with some of the moving average systems that I have, like the 1929 crash, the 1987, 1962, there's just a lot of similarities in how the pricing has structured itself. And again, we're right at a top moving average where if we were to break down, we could really break down extensively. 1987 obviously is very interesting because it just happened over a weekend, right? But as we know, things have been happening over the weekend in 2025 and collapsing markets. You leave the market on Friday thinking everything's peachy keen, hunky-dory, and on Monday markets are down. Huge drops, right? So it wouldn't surprise me, and I think even in the last video I said that I think could be something very bad that happens over this coming weekend. I don't know if trade deals go south or all of a sudden tariffs start getting jacked up beyond comprehension, or something like that. I don't know. Or maybe maybe a few countries try to pull together and negotiate on a larger scale to make it more difficult for President Trump to negotiate. I don't know. But let's look at the 1987. And again, please don't send me nasty grams saying that I said 1987 is going to happen. No. I'm going to show you where I believe the market is going to go soft in current markets into February 25th, 26th, because February 17th was removed. Again, I think the bottom in the market is going to be roughly February 25th to 26th, plus or minus 1/2 business day. Yes, NVIDIA reports earnings after the close on February 26th. But as you know, my models usually pick somehow a key event to play off of. I don't know how the model does it, but it does. So it could be picking, the bottom before NVIDIA reports and markets go up, or it could be predicting the crash after NVIDIA reports, right? So anywho, in my opinion, markets should have softened quite a bit by the time we get there, because I believe that these gold waves are pretty powerful, and so I would think that the market should be at a pretty bottom level going into NVIDIA's earnings anyways, because it's near the bottom of the model's call for a macro bottom. And so usually only 1987s can happen over the weekend. So I would assume that worst case scenario, we wake up on Monday, February 24th, and markets are down 7, 10, 20%. I don't know. I don't know what circuit breakers can do nowadays. I don't know if markets can get around circuit breakers. I don't know all that fancy stuff. But if futures were to go down 7%, let's say on Sunday night, they hit some kind of circuit breaker, they get frozen, and then they turn off for 2 hours or something, I don't know, and then they go down another 4% or something. It could be a series of dominoes of something, of breaking circuit breakers. I really don't know. But anyways, I think there's some similarities I'd like to point out today. And again, all I know is the market model is suggesting that there should be a substantial bottom in markets around February 25th or 26th, plus or minus 1/2 business day, is the on the road to the macro low in markets on roughly March 21st or 24th. I'll provide a video with the official bottom, obviously in mid-March most likely. But yeah, the macro bottom is still set for roughly March 21st, 24th-ish. I just had this also looks like some type of major bottom, or stopping point, maybe I should say. I don't know if we drop 500 points, 700 points over the next 4 or 5 business days, and then we pop for a couple days into the end of the month. Get some 401k liquidity, injecting the markets, keep the markets afloat into February 28th, March 1st, or whatever. Or if there's a business day or if that's a weekend, sorry, whatever closest business day would be, the first of the month or whatever, you could have some 401k inflows, propping up markets. Again, all my work is forecast use only. I'm just hopefully really good at my models, right? I'm not a financial professional in any way, shape, or form, so please speak with a licensed professional prior to investing. Again, I am not a licensed professional, so when I get tons of nasty grams saying that it's going to be exactly like 1987, first of all, I'm not a licensed professional. I'm only doing forecasts. Number 2, please speak with a licensed professional prior to trading. Number 3, if you don't know anything about trading, you should probably spend a lot of time speaking with people that do, prior to investing, as well as speaking with a financial professional. Disclaimer, disclaimer, disclaimer. And so anyways, please don't send me the nasty grams. I know I'm going to get them anyways, but hopefully markets drop into the February 25th, 26th bottom, and then either way, the model gets it right, and so hopefully the nasty grams will be held to a minimum. Right? Anyways, if you want to subscribe, please do. If you want to donate, please do. If you enjoy my work, you can't wait for the next video. It's always an encouragement to get a $34 donation, or whatever you want to give, 23 for Michael Jordan, 77, whatever, more, much higher, whatever you want to do, or $7.77. I actually asked my parents for that for my birthday this year. My mom asked me what I want for this birthday. I said $7.77. That's all she gave me, so I was very happy. Anywho, let's jump into the model. Donation QR codes and donation link below this video, and PayPal link below the YouTube video down in the description. Thank you for following me. All right, here is the 1987 graph on top and the 2025 graph of February current day. Okay, so you can see if you zoom in, you can take a snapshot on your phone, zoom in on the picture, whatever you want to do, or go on your laptop, blah, blah, blah. You'll see that the arrow is pretty much sticking right on top of February 25th. That's what I would say, Sparky. That's, you know, I think that's a quote or something from Aladdin back in the 1990s. Anywho, if you didn't catch that humor, don't worry about it. So, looking for my next low, major low in markets around February 25th, 26th, plus or minus half business day. Yep, that's how I'm getting there. So, what you're going to notice about 1987 is you would argue, I think pretty plainly, that the model is actually predicting the crash of October 19 or no, October 20th, 1987 to take place, right? It can't tell you points, right? It can't tell you how far it's going to drop or what percentage, but you can see the purple wave had 1, 2, 3 count on it going out to October 20th, 1920th. You could see that the Homer Simpson red line model, that's the couch potato algorithm that I made. It's extremely for laziness. I figured I made super competitive algorithms like Michael Jordan and Jaws are super aggressive, super competitive. I should do the exact opposite and find one that's a couch potato model that is basically as boring as I am as a dad and doesn't change. And yeah, so I'm not that exciting as a person, but neither is this one. Seriously, you get a 1, 2, 3 on the bottom of 1987 on the red wave. You draw it out to the top of the graph. It hits right on October 19th or October 20th, 1987. And you might say, well, you probably doctored that red wave when you updated the model. And for those of you that actually believe me when I say all this stuff on YouTube, I didn't touch it at all. That's what's even so more beautiful and shocking about this, right? It had a 1, 2, 3 on the lazy man's Homer Simpson couch potato algorithm, predicting that markets would bottom on roughly October 19th or 20th, 1987. And some of you would be like, well, I'd much rather have bought on October 20th and 19th, right? Because on October 19th, I think it bled and bled and bled and bled. And so even if you thought you were catching the bottom on October 19, 1987, the bottom was a long ways down below. So what are the similarities between February 2025 and 1987, other than having a snazzy gold wave, purple wave, green wave, and Homer Simpson wave? Well, you can see the top of the two crests in the gold wave. On 2025, I've labeled them as 1 and 2 on the top and then 1 and 2 on the bottom. Now, the 1 and the 2 on the top showed up in 1987, right? You drew a trend on top of the two tops of the gold wave, and with the red line there in 1987, and the top of the graph, it hit October 20th, 1987, right? So it was predicting that the major crash in markets would occur, and the low would be in markets around October 20th, 1987, plus or minus a business day. And surely enough, that's what happened, right? Yeah, so that's what's happening as well in February of 2025. You have the 1, 2 going out roughly into February 24th, 25th, right? Maybe even 26th. And then you have a trend also on the bottom for 2025, and same as 1987. Now, in 1987, you had the double bottom, and it drew a trend line out to the center of the graph and hit the exact center at zero, the zero horizontal, at the exact date that the market was going to bottom on October 19th, 20th, right? That's crazy. And again, I didn't change any of my algorithms when I threw the 1987 date in there. I kept the algorithms exactly the same, which should be astounding to most people. It is to me, at least. So anywho, that's exactly what's happened in 2025. We have the gold wave hit a double bottom, the 1, 2 marked out there, and it's hitting the center zero axis on roughly February 25th. So again, what's interesting is that would be one day after, let's say we have a 12% crash over the weekend somehow, some way. I don't know. I don't know if it's even mathematically possible with the circuit breakers. But what's the other argument? Well, even if it doesn't drop 12%, let's say it drops 500 points over the next week, right? As you know from my previous video, my previous update, I was looking for some type of bottom. I still need to remove President's Day from the date sequence. So this is essentially the update after the date has been removed. President's Day has been removed from the date sequence, so that's why you're getting another day. So originally it was picking like what, February 24th, so now it's February 25th, so to speak. So yeah, so that's in a nutshell. I'm looking for some type of major downward move in the markets into February 25th, 26th low, and yeah, I'll make another video after that. And if you want to see more of the macro models, you can definitely go to my blog and look at that. And if you do have requests, obviously I'm not at the place where I really take requests. I'm trying to keep my material to a basic level so that people want to donate, right? So if you feel like you need to lecture me on all the changes I need to make, please just save it for yourself and take a walk and enjoy your conversation with yourself, because it's not really that important to me at this point. Obviously, as I grow my base and as people show support, obviously, then I'll be at a place where I'm willing to take that next step maybe and make changes and things of that nature. But it's always interesting to me how people don't, a lot of people don't want to donate, but they want to tell you how to change your presentations and how to make everything better. It's kind of like your mother-in-law sometimes, right? You're like, I don't really want to hear all that, but I'll listen anyways. Yep, I said it. And yeah, I like singing the song Mother-in-Law from what, the 1950s or 60s. Every now and then, I like singing around my mother-in-law just to make her laugh a little bit. Yeah, I actually love my mother-in-law. She's the best. So Laura, if you're listening, you're the best mother-in-law a man could ask for. So thank you so much. Thanks for taking care of the grandkids. And yeah, wish you many good years on Earth to come. May the Lord bless you, Bob and Laura. So, anywho, looking for a giant opportunity here for a lottery ticket, possibly for the 1987 style lottery ticket into the low next week. Obviously, you can't match 1987 with the circuit breakers and everything, most likely not. So, don't think that I'm trying to make it sound like that, but definitely it's pretty cool sometimes when you look at the model and say, wow, there are a lot of similarities. I wasn't expecting to see a lot, but sure enough, there are similarities. You got the purple wave with a 1, 2, 3. There's a green wave with a 1, 2, 3. In 2025, you may have heard the gold jaws going out to roughly the 25th, 26th in February, things of that nature. So I hope, yeah, this is the latest update. That's where I'm going to look to go long. I'm going to look for some type of last 100 point, 70 point drop in the markets right around the 25th, 26th, and then go long probably for 2 or 3 days. That's my kind of my penciled in thought right now. So again, I'm not a professional. I'm not licensed in any way, shape, or form. But hopefully you're so addicted to my work that you can't stop watching it. So please share my videos. Please like my work. I don't care if you click the like button or not. Does it really help me in YouTube? I doubt it. Does it really help you if you get comment? Not really. Probably not. But I actually appreciate your comments. I want you to comment because you want to. I don't want you to comment because you feel like you're going to help some algorithm figure out that, my video should show up in front of 3 more people that are not going to click on my work. It doesn't really matter to me, because if the success is there, I think the crowd will come, right? Kind of like the Field of Dreams. If you build it, they will come. So if I build a great model, if my model is extremely hard to beat or extremely competitive with some of the top names in the industry, then the following will come, right? So it's not, I don't care about the likes and everything. If you want to subscribe, that'd be awesome. If you want to donate, that'd be awesome. But likes and comments, I don't really care. But yes, I do appreciate comments every now and then. And everyone's got to give me a jab every now and then, keep me on my toes. I get it. But if they get too out of hand, and the models crush their constant nagging of me, then usually they get blocked on YouTube. So Understand that might be a consequence if you keep nagging me. Keep it classy, keep it reasonable. If you wanna boo me or trash talk me, I can handle a little bit. That's fine. But if you're gonna constantly berate me and tell me I'm gonna be wrong every time I turn around and you talk to me, and then have a lot of questions on top of that, understand you're most likely on the way out at some point in the near future, unless you get it right, which could happen, right? I guess you could beat MJ, you could beat Jaws, you could beat Lazy Homer Simpson. And then also on the bottom, 2025, you can also see like Homer Simpson going to the center line there, a 1, 2, 3 count on the red wave. And what's interesting in 1987, you can also see kind of like a 1, 2, 3, so to speak, on the red line into the center of the graph as well. And then you can have a red line going out to the top of the graph. And I'm sure there's a red line way back in time, going to point out to roughly there for the bottom. And I think actually I showed it to people. Oh yeah, so if you take a line off the bottom of the red wave around the end of 2024, December 31st, and then off the top of the red wave on January 21st, 2025, if you take those 2 points and put a trend line in between those, you'll actually come up with roughly February 24th, 25th off the red wave there. And that's kind of a slow-moving wave, so it's kind of hard to tell if it's always 3 touch points or 2. But anyways, that projection would get you out to roughly February 24th, 25th, 26th for some type of 100, hitting the top of the graph for a date projection. So you could argue that the bottom graph also has a red trend line going out to the top of the graph and to the center as well as 1987. So there's a lot of similarities here. And again, I don't think it'll be precisely the same, but I do think there'll be a sell-off into February 25th, 26th here. I just don't know how severe, but I do expect a sell-off. Obviously, it's not part of my major call. My major call is the March 21st, 24th macro bottom, and that's where I'll probably start looking at going long on a much bigger basis. As I'm not a licensed professional, but I do have my 401k all cash. So if we do have a substantial sell-off sometime into roughly the March 21st, 24th low, I will be speaking with my own financial professional to see if that's a wise investment. Huh? Is that a better way to say it? Protect myself. Anyways, hopefully you enjoyed my work. Thank you for all those who keep donating. There are a number of you who continually donate, and I appreciate it very much so. It makes me happy. And obviously, the last time I think I talked, I said that there's a gentleman or individual who donated like $1,500 on Super Bowl Sunday. That was awesome. I'm thankful. Markets have been nothing but stubborn here, so I was hoping to make them a lot more money, obviously, or I should say, provide them with valuable timing that they could use their own indicators and speak with a professional investment professional to help them in their own tools that they use. Hopefully my work would be a nice supplement to that and give them near razor sharp forecasts. That's all I can do is give forecasts. Again, all my work is forecast use only. Thank you so much for watching until probably, I don't know. I might have to make a video, around February 25th or 6th, right, to give you a peak projection. My guess is that there could be another 5 waves, honestly, after the February 25th, 26th low. So that's why I'm kind of expecting a huge dump. Because after the mid-January low, we've had 5 waves up. There could be some type of crazy volatility after the February 25th, 26th low that would create some type of extremely fast 5 waves into like early March, let's say. It could be like March 10th. I don't know yet. But like on a small micro scale, right? And then I could dump again into the March 21st, 24th macro bottom prediction. I don't know right now. I'm just throwing out words right now because a month obviously is enough time to get in 5 waves and still have a massive drop in markets. We've seen that with the bottom in mid-January into roughly the Super Bowl. So I don't know if it's anything's possible with this market, with the Fed and with how everything's going economically, and how President Trump is also adding a different dimension to the markets. A lot of variables being thrown at the markets, so I guess there's still a possibility you could have 5 waves up extremely fast, back and forth, extremely choppy, and then have some final drop in markets around March 21st. So these are all the thoughts that go through my head all day long. If you really want to know what my deep thoughts are about what could happen in the markets, I truly share with you what I think about markets. I don't try to hide things from you. Sometimes people ask questions like this or that, but if I knew, I would tell you in the video. I truly would. So my thoughts come out loud while I'm doing a video. So if I don't sound like I completely know which direction it's going, I really don't know. And if I say it's wave 1 or wave 3 or wave 5 or whatever, and I don't sound like I really know what I'm guessing at, then I really don't know what I'm guessing at. I'm just making some estimations. But on the daily zigzag graph that some of you have seen, the model is like on some kind of a wave 5 up from the January 13th, 14th low. So that's why I think that we could see a nice dump into February 25th, 26th, is because once you have 5 waves up in the zigzag graph, you have the exhaustion wave to follow. And that's why it would seem to me that you'd need some type of either big wave up and then down into March, the March 21st bottom. So let's say markets just stay flat, let's say, after Feb 25th, 26th low. If markets were to stay flat and slightly up, you could keep like a general momentum going for maybe 2 weeks, 3 weeks. And that'd be enough to get the zigzag model just into wave 1 into beginning of March. And then wave 2 could come down on a very macro scale. Wave 2 could come down into that March 21st time frame. And then wave 3 would be off of the, on a macro scale, wave 3 up would be off the March 21st low, and then it'd be a huge move up in the market, right? So that's usually a wave 3. So that's what could happen too, honestly, because usually the best buy points are not wave 1 up. They're usually wave 3. So it's very possible that, again, markets move sideways after Feb 25th, 26th low, and then do some type of 10-day sell-off or something. Very brief, again, might be just like this one, maybe a little bit longer, where that's wave 2 down, let's say, into March 21st, 24th, again, so that creates like a 2-week window of downdraft, and then from the March 21st, 24th low, you just have a skyrocket move upwards. Yeah, so I also think that there could be some type of bottom at the end of April, because that's the next Fed meeting, and I'm seeing something like that in the gold wave on my zigzag model, but that's still TBD. Just throwing out some dates out there. Some of you really get a kick out of that. So let's see if markets are going to how much they're going to sell off here into February 24th, 25th, 26th, plus or minus a bit, half business day. I'm all short still, so I'm just waiting. But I do think I have to exit. I'll probably most likely exit my shorts around the 25th, 26th, because there's going to be some type of month-end pop. Usually is. The 401k injections always demand it. And then lastly, I think the green trend line in the 2025 graph here on your screen, I really think it's gorgeous. It's a nice 1, 2, 3 count, very crisp. And so that usually is a very good indication that there will be some type of good sell-off right around that point in the future. And that's usually the bottom. Usually is the bottom I try to catch. So could be a 70, 77, 100 point, 117 point sell-off around that time frame. And then looking at moving averages, obviously I'll be trying to buy there, more than likely go long for 2, 3, 4, 5, 6, 7 days. And then I'll make a video maybe at the very end of the month if I'm feeling up to it. But yeah, I always think anyone can donate, because I think $7 or $3 or $4 or $23 isn't a lot for most people. I don't think $7 is. So that's why I always throw it out there, because I don't want people to think that I'm uppity and we'll turn my nose up at even small donations. I think the model's fun for everyone to watch. So yeah, anywho, hopefully you enjoyed this week's video. I guess I got to figure out what week it is, right? It's, I don't know, is it week 8? Anyways, I'll have to update my thumbnail when I get done with this video. Hope you have a good rest of your week, and hopefully see markets sell off heavily into the next bottom on the road to the macro low on March 21st or 24th, 2025. Until next time, I'm brschultzSP500. Take care. And again, this model was also picking right around the March 21st, 24th bottom for markets for the major low with a zigzag, a 1, 2, 3 touch point, brschultzSP500 systematic way of timing markets with a zigzag. And then this is the macro peak for December of 2027. So in a nutshell, in under 10 minutes, maybe near 5 actually, you've got the complete rundown from the macro to the micro to the micro to the macro. All right, race fans, I'll catch you later. Bye. So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast.
Forecast.
Use
only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
a licensed investment professional. That's Latin. So we'll say caveat emptor. Seek professional advice prior to investing. Bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.